question I get asked often is, how are commercial interest rates set? So first and foremost, it's very different from bank to bank or financial institution, so keep that in mind. But I am going to talk about how generally they are determined. First and foremost, what we have is the Federal Home Loan Bank. The Federal Home Loan Bank is a base interest rate that can be found on the FHLB site, plus a margin that the bank charges. So again, the FHLB is the base rate that's charged. So let's say, for example, it's 1%. And then on the other side, the bank needs to make 2% on that loan. So your interest rate is 3% when you add the two together. Now, the Federal Home Loan Bank rate changes based with the market, and then that margin usually stays the same. Another way that interest rates can be determined is by using prime rate. Prime rate is determined by the federal government, and that can be located on the Wall Street Journal site or by a simple Google search. And usually it's prime rate plus a margin. So maybe if prime rate is 3%, and then we want to make 1% or 2% on the loan, then you're looking at 4 or 5% on an interest rate that's based off of prime. There's also government treasury rates. 3-year, 5-year, 7-year, 10-year treasury rates that works just the same, where there's the base rate plus the bank and a margin. The biggest thing that people need to know is it's very rare to find fixed long-term interest rates when it comes to commercial loans. In general, you're going to find anywhere from 5, 7 to 10 years. And anything that's over 10 years, you need to be highly qualified for. And you may be able to find something that's 20 to 25 years. But again, like I said, it's extremely rare because the bank is taking on a lot of interest rate risk.